Good afternoon and welcome to the Huddle Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to CEO Martin Higginson. Good afternoon to you, sir.
Yeah, good afternoon. Thanks for allowing us to present today. So really just wanted to get into it. First of all, HUDDLED, it's been a transformational year, as people will have seen in the results earlier this morning. Just a little bit of background on who we are. We've had about 40 years of experience in sort of not only starting businesses, but exiting them and listing them. We've listed 6 businesses in total. One of them getting to an AIM top 50. So I'd like to think we've got a reasonable understanding of sort of business and how to make it and turn them into a success. What we're doing here really is about bringing together a number of e-commerce businesses, predominantly focused in the discount sector. You'll see with the addition of our Food Circle acquisition, that's another string to join Discount Dragon. And our ambition really is to grow this into a sizable business. We can see all the benefits of, one, the strong balance sheet, allowing businesses to buy more stock. We've seen a lot of the benefits in Discount Dragon and some of the early sort of benefits in Food Circle, and we'll get into that a little bit later. That combined with, I think, years and years of marketing skills and organisation, really pulling all these things into one central warehouse, investment into fulfilment, I think really sets us on the right course for building a very strong group of e-commerce businesses. So just looking at the evolution, obviously last year, 2023, was, as we said earlier on, a transformational year. We sold both Emotion and Uvisan. We sold those for $25 million, 20.4 million pounds. That resulted in a sort of 13 million post-tax profit for the year, which was great. Allowed us to return 12.7 million to shareholders. So I think some big ticks in the box, but most importantly, it left enough money in the tin for us to refocus the business and re-energize it in terms of what we were going to do next. And as we touched on earlier, this is about investment now into building that e-commerce sort of group that we talked about. We acquired Discount Dragon back in sort of late 2023, and ever since acquiring it, we've seen really solid growth. And we'll get into some of the KPIs a little bit later on. We also acquired Food Circle Supermarket, and as you'll see as we get into the slides, we've taken the decision to rename that business NutriCircle. And the reason for renaming it is so that it can really focus in on its sort of key area of expertise. And then we've entered into a partnership on Let's Explore with our distributor Wicked Vision, which will really sort of see the margins that they were enjoying as wholesalers coming back into the group. So I think a big tick in the box for that business. And it also allows us not only for them to go in and help us manage the business, but frees up more time for us to not only grow Discount Dragon, NutriCircle, but also look for other potential acquisitions on the horizon. So just looking at HUDDLED Group PLC, where does it sit today? Well, we've got Discount Dragon. We talked about NutriCircle. Obviously, that was Food Circle Supermarket, and we'll get into some of the details of what we're doing with that business a little bit later. And then on the right-hand side, we've got Let's Explore and Zodiac. So just talking about Discount Dragon, as we said, we acquired this business late in 2023. If we look at the market here, and I think it's really important to understand the market, understand the size of the market and the potential that we believe we see in this business. Everybody loves a bargain, never more so than today. But I think it's always been something that's been at the heart of every shopper. This is really backed up with a movement to online shopping. And I think if your house is anything like ours, you'll have more parcels coming through the door than ever before. And a lot of this is driven by Amazon, but also it has a sort of halo effect into other businesses. And then I think if you look at sort of things like groceries, which Discount Dragon sits in, then why wouldn't you want your groceries delivered to your house? So I think the combination here of really, really great savings, a movement to online shopping, and the rise in sort of online supermarket shopping for, you know, trays of beer, large items, you know, nobody really wants to carry these around. Get them delivered to your house and get them delivered quickly. You know, we think these are big ticks in the box, and I think the numbers underpin our beliefs. So really, what is it? What is Discount Dragon? What is it famous for? Well, at the heart of our business, it really is famous for surplus stock. And when we talk about surplus stock, we can mean anything from items that are coming close to their best before date. And best before date should not be confused with use by date. Discount Dragon sells dry goods, stuff that goes in your cupboard. It doesn't sell stuff that goes in your fridge. So really, this is about best before date, something that is within 2 or 3 months of its best before date. It's perfectly safe to eat. And, you know, we've all got tins of beans in our cupboard that some of them, I guarantee, will be past their best before date. They're perfectly safe to eat. And all of this is published on the government websites. What this allows us to do in terms of buying best before date, a lot of supermarkets won't stock items that have got 3 to 6 months of best before date time on them. So what happens to this stock? And it's exactly the same with mispackaged stock. You know, on the photograph there is a sample of the Budweiser beers. They were produced for the Qatar World Cup. Now, it's been well documented. The Qataris then decided that they weren't going to sell alcohol at the World Cup. So all of that beer effectively went into the surplus stock market. Same with the Body Shop items. That was liquidated stock, perfectly good body butter, liquidated stock that we were able to pick up. Other examples are things like chocolates, where you've got timely events, Christmas, Easter, Halloween. All of these events are important. Once Christmas passes or Easter passes, which is a great example, the supermarkets will return chocolate that is perfectly good to eat back to the manufacturer or the wholesalers. And all of this is surplus stock. So there's tons and tons of this about. But the problem that we're actually solving is, unless people like us take this surplus stock, it's going to go into landfill. And it's really, you know, there's nothing wrong with it, perfectly good to eat. So we've got to try and fix this problem. So I think not only can we start helping to solve that problem, we can also help consumers in delivering product at a much reduced price. So there's some stats there, you know, about what surplus stock is. 9.5 million tons of surplus food waste in you know, each year in the UK alone. You can see what it does to sort of greenhouse gases. So there's a big problem here. And one of the things that people asked us is there enough stock? There is plenty of stock. And a good example of this, we've just finalised literally yesterday a deal with a major airline. We've bought all of their duty-free stock that goes on their airlines for probably 1/8 of the retail price. And this will allow us to sell that, making an excellent margin and still sell it at sort of 50, 60% below retail. So the customer gets a great deal, stops it going to landfill, and we make decent margins on the uplift. So looking at the growth pillars, this year is really one of investment, not only in Discount Dragon, but also in HUDDLED Group across the piece. And a lot of the investment is going to go into the warehouse, into fulfillment. We've identified a warehouse and we're at advanced stages in concluding the lease on that. So hopefully within the next few weeks or months, we'll be able to sort of move into the new warehouse and really start scaling the business. Linked to that is stock investment. We've invested in stock right from the get-go with Discount Dragon, and we've also done exactly the same with NutriCircle. And that stock investment is now reaping the rewards. And we touched on what we've just done with the airline company. There's a lot of stock out there, so we need more cash in order to invest in stock. Broader range equals better average order values. And obviously, as we start scaling the business, we need the depth of stock so that we make sure that we're always replenishing the goods that are in there, especially the sort of fast-moving items. And all of that this is then linked to marketing investment. You know, this is about acquisition and retention. And we look at this very, very closely on an hour-by-hour basis, even a minute-by-minute basis. We are obsessed with the data that runs around our marketing. And all of these are sort of interlinked. The better stock we've got, then the easier it is to market to customers. the better the warehouse or within the new warehouse, the quicker we can get goods out to the customers, and therefore we give them a better experience. And all of these interlink ultimately to drive increased margins. But this isn't going to happen overnight. This is about investment. This really is about investment this year in order to put the growth pillars in place so that we can really start turbocharging this business into the sort of golden quarter of Q4 this year, and then into 2025 and beyond. So we talked a little bit about data and how important data is to us. Data is really at the epicenter of our business. Everything that we do is driven by data. We've built a sort of business intelligence platform, which allows us to see in a real-time environment how many customers we've got, what conversion we're getting, what the average order value is, what are the key items that are selling, what's the day's cover on these items, what are we running low on stock on, everything. And this has taken probably 6 or 7 months to build, but this is now at the heart of what we do, because everything should and is now driven by data. We call it sort of mathematical marketing, where you're making decisions based on little tweaks. And this is going to be a sort of loads and loads of sort of 1% increments. And each time we improve, each time we get better, and each time the data then backs up those decision processes. So let's just look at the numbers. Where are we, and what does that mean for us in terms of where has the business grown? What is it doing? When we bought the business, I think if you go back to when Discount Dragon first started, it was a tiny business. It was bought privately. It was doing about £75,000 a month. Now we're up to sort of Q3 was £1.3 million. Q1 this year we're at £2.1 million. So a 60% increase from Q3 to Q1 of this year. And you can start sort of seeing the number of orders that we're processing, but I think more importantly, the number of customers that we're adding. We talked about investment in marketing, and you can really start seeing that we started to scale that in Q1 of this year. 20,000 new customers in Q1, and we'll continue that investment as we move forward, and we'll start doing more. We've tested a number of different marketing initiatives. We've just signed an agreement with Shop on TV, and some people will have seen us on late night TV on ITV1, and that's performing very, very well for us. So we're on every week now, up to 3 hours, sort of late at night, but that's generating great awareness for the business and a lot of new customers. So it's a big tick in the box, and we'll look at layering more and more marketing onto that. We do a lot of social activity, but then it's about adding other sort of areas, whether that be radio, whether it be TV, onto that, so that we create this halo effect, and we really start to build the brand and build sort of longer lifetime values through better retention. So NutriCircle, Food Circle Supermarket. We acquired this business literally a few weeks ago, so it's very, very early stages, but to say we're thrilled is probably an understatement. We rebranded it, or we're about to rebrand it, NutriCircle. And the reason for doing that is really Food Circle Supermarkets, it doesn't quite do what it says on the tin. And when the business was originally set up by the two founders, they were effectively trying to replicate what we've done with Discount Dragon. The reality is they had to focus on a sector due to sort of lack of cash and sort of a small balance sheet. So they focused in on the sort of nutrition, on the protein bar market, and they tapped into something that was, one, very lucrative, and two, had a lot of intent from customers. So they managed to bootstrap this business and grow it to 1.4 million of turnover. But it still was strapped of cash. So we've been in talks with them for the last few months about them joining us, what the business could look like with them working as part of HUDDLED Group. And I'm really pleased to say that we've managed to quickly allow them to invest in more stock. This has resulted in increased sales without a shadow of a doubt. And we've just and so started to do some marketing for them. So we've started to employ our sort of marketing skills into their business. So the business is predominantly focused on nutritional bars, sort of protein bars. It was doing a little bit of whey powders and vitamins. We're going to extend the range. So what we want to do is anybody who's into healthy eating, goes to the gym, etc., we want to be the go-to place for discounted products in this sector. And this is a big market. As you'll see on the right-hand slide there, the UK market is growing faster than the US market, and predicted to be sort of over 100 million of revenues in the sort of coming years. So big market, great demand, huge intent from the customers, better range, but not only depth but breadth, and I think we can really start growing this business. And this is starting to be seen in some of the numbers. As I said, it's really early days, so we've got to be sort of slightly careful that we don't sort of start cracking open the champagne, but we are very encouraged. Total sales last year 1.4 million. You can see the average daily orders as we are now. Since the 12th of April, it's grown 125. And I looked this morning at the first sort of 8 days of May, and I can see that's up to over 190. So we're seeing huge growth in this. And when I talk to the marketing teams, when I talk to the guys on the floor about stock and the breadth of new products they're adding, they can see this is going to be a sizable business. And we've given them a target to achieve sort of 2 million of profitable revenue this year. And I think they're very much on for that target. So, a big tick in the box. And as I touched on earlier, what we're especially encouraged with in this business is the intent of customers. The repeat customer rate in April was 74%, which I think is a massive tick in the box really for the guys, what they've done and how they've managed to really increase retention and build lifetime value. So we talked about Let's Explore and the partnership on that. What we've done is we've partnered up with our wholesaler, Wicked Vision. Just to give you some background, what we were doing historically is we were selling Vodyak into Wicked Vision. They in turn were then selling that on to people like QVC and other teleshopping channels around the world. We've now decided to bring that margin within the business and have this much more as a sort of joint venture type business with Wicked Vision. So I think this is the right thing. It also allows us to bring in the Let's Explore range into their sort of wholesale or sort of B2B environment. They've got great relationships with the trade, great relationships with teleshopping channels on a global basis. So I think that just really allows us to expand the range, expand the opportunities here. We sold 30,000 Vodyak last year. We believe we can sell more, and with significantly increased margins, the business will be a lot more profitable. Let's Explore was really last year was about launching the new products, seeing what customers thought of the new range. We had Let's Explore Oceans, Space and Wildlife. We sold 8,000 units. We were a little late due to some marketing challenges with Facebook in Q4. But what we are encouraged by is the feedback from customers. We're rated excellent on Trustpilot. We've now started early conversations, or Wicked Vision have started early conversations with a number of trade buyers, and we're getting really good feedback for this product. It's highly educational, highly immersive, and I think ticks a lot of boxes, not only for the consumer, but for trade or retail buyers, retail shops, and also teleshopping channels. So we can see this business growing as we move forward. And with Wicked Vision now helping us to run the business, it frees us up more time to focus on not only Discount Dragon, but NutriCircle, and potentially looking at other suitable acquisitions for us. So where are we and what does the year ahead look like? Well, as I touched on earlier, this is about driving growth, and this is about an investment into those pillars, investment in not only stock, marketing and fulfillment. We've got the new warehouse on the horizon. We're at advanced stages in getting that lease signed. So we'll be in a new warehouse this year, and that will then allow us to move NutriCircle into that warehouse and fulfill everything from those operations. In our existing warehouse, we do have some challenges, and I think this gets back to sort of showing, where are we in terms of Discount Dragon and the growth potential. just to sort of give people some idea, in April we wanted to stress test what was the size of the market, how big was this market. So we scaled marketing on that day. We got 3,000 customers through the door, all ordering. We did over £100,000 in revenue in a single day. So what we proved to ourselves is there is a sizable market here. Now, what people shouldn't do is start extrapolating that and timesing it by 30 and coming up with what we should do, because the reality is our current warehouse is constrained. What it did prove to us, and it gave us the confidence to sign the lease on a new warehouse. We knew that there was customer demand for the product. And we can also see that customer demand in NutriCircle as we start scaling the marketing. As we move to the new warehouse, we'll be able to operate 7 days a week, 24 hours a day. So our ability to scale in a controlled environment is huge. The market's there. We know we can get the stock. So all of the things are pointing in the right direction. We've got a solid balance sheet, so we are able to execute our plans. And using that balance sheet also allows us to do things like, taking opportunities of buying stock at the right price. We talked about the airline stock that we've recently bought. And just to sort of give people some idea, that retails at about £2 million. We bought that for £250,000. So you can see the opportunity to mark that up, but still deliver significant savings. So really, why should you invest, and why should you consider investing in this business? And I always think this is a good question to ask, and probably even more that we answer it. We are, in my view and the board's view, innovating for success. This is a hard business. We've gone into a sector that is crowded, is full of challenges, but we've managed to build a nice sort of blue ocean for ourselves in terms of what we're doing. Discount Dragon is famous for surplus stock, and NutriCircle is also now building its notoriety around being famous for sort of healthy eating, whether it be whey powders or protein shakes or protein bars. It will build that, and people want the discount. We know people want the discount, and by joining all of those dots together, we firmly believe that we're on the right trajectory for success. Building strong brands is at the epicenter of what we do. We want people to recognize our brands. Obviously, the Discount Dragon on ITV starts helping us do that. We will, the more we advertise and the more we're in front of people's faces, the more we can build that brand recognition. And the more we build brand recognition, the greater the lifetime value. And this is one of the reasons for changing the name of Food Circle to NutriCircle. It allows us to build that brand and build brand recognition in a sector. We want, with NutriCircle, we want people to feel proud and almost sort of, I can imagine people having that on their T-shirts in the gym. Is this business scalable? Well, I think as we've identified earlier on, this is a highly, highly scalable business. 3,000 orders in a day, over £100,000. We've ticked that box in terms of proving to ourselves, is there a market here? There's definitely a market, and the market's big. Can we get stock? Yes, we can get stock, and there's a lot of stock about. Not only best before date stock, repackaged stock, but also, as we've proven, liquidation stock with things like Body Shop, and surplus stock with things like airlines and so on and so forth. So highly, highly scalable. But all of that requires the investment in the warehouse, and it requires us to have that infrastructure in place that we can operate 24/7. And then we can spread the marketing skills across all of those businesses. What's the financial upside? Well, as I said, this year is one of investment. It really is about building those foundations, but we can see the financial upside. With scale, really just come profits, but you've got to get that scale. Is there scale there? Yes, we've demonstrated that with what we did earlier. So I think there's a big financial upside. We talked about the market opportunities. I think the market opportunities here are huge, and we personally get very excited about what we can do, what we can achieve in these markets. The discount food sector is massive. Just that sector alone on protein bars, over £100 million. We've seen what people like the Hut Group have done with My Protein. So big opportunities here that we need to seize on. And with the right infrastructure, we can do those. And we've certainly got the ambition. We've got a lot of ambition. We've got an amazing team from great sort of warehouse colleagues to unbelievable marketeers that are looking at data, to people that are building sort of fantastic brands for us. So we've got an amazing team, lots of ambition, and I think we're really sort of striving for success. We're all, the whole team, from everybody upwards downwards, is very excited about this business and what we can achieve. So look, thanks very much for listening. I appreciate it. I'll sign off on the presentation and welcome questions.
Perfect, Martin. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We have had some pre-submitted questions, and I want to start off the Q&A session with these. The first one reads as follows. Is the growth of Discount Dragon constrained until you move into the new warehouse?
Thanks. I think it's an excellent question. As we alluded to before, we are now hitting the ceiling of what we can do in our current warehouse. We stress tested it, and we didn't stress test it to the max, but we certainly put the guys under some pressure with what they could do in a single day. At the moment, we're probably capped out around sort of 30 to 35,000 parcels a month. The new warehouse will allow us to increase that substantially. We don't quite know by what multiple, but it is significant. Just to put that into context, we've got 54,000 square feet of warehouse compared to probably about 30,000 square foot of usable space. We've got much greater height, probably double the height. So in essence, in terms of cubic space, it's probably more like 100,000 square feet. And we've got access for goods in and goods out exclusively for us. At the moment, we are in a shared facility. So we've got shared goods in and shared goods out access. So it is challenging where we are. But we do know that, as I said, moving into the new warehouse will give us a big multiple of that. So yes, slightly constrained at the moment, but that's all being solved within the next, we're hoping 10 to 12 weeks, we'll be in the new place and ready to scale.
Perfect. Thank you very much, Martin. The next question here. Will you need to raise capital in order to drive growth, invest in stock and accelerate market spending?
We don't think we're going to need to raise capital in the sort of short to medium term. We've got enough capital. We've identified what we want to do. We're investing in stock. We've invested a lot already in stock in Discount Dragon. We're probably knocking on the door of £1 million worth of stock, which we're turning on a regular basis. There's a small amount of capital needs to go into NutriCircle to help grow that business, but it's probably £100,000-ish. We've got some cash that's going to go into the new warehouse, but again, barring rent deposits and things, it's probably hundreds of thousands of pounds. So we've got enough cash to do what we need to do. Obviously, there are, we're always on the lookout for acquisitions, but they will be very strategic and things more like on the line of the NutriCircle acquisition, where we can add our skills to a small acquisition and then grow it organically, having whatever acquisition target we look at, having them done a lot of the hard lifting and proving that there's a market in that sector.
Perfect. The next question here. What is the competitive landscape in the UK after Matato's leaving the market?
Obviously, Matato's were in there. We gave them a good run for their money. And I think using their words, we were doing it better than they were doing it. So I think we've got good marketing skills. We've obviously seen Poundland come into the market fairly aggressively. We see them, we don't just sit on our laurels. We see we've got to up our game, which I think we're doing. We're doing with greater marketing, greater focus on marketing. So, I think we're in a good place, but we're never complacent.
Perfect. Another question here. Why did the Wicket Vision RNS go out so late on Friday?
Shall I take this one? Yeah. So we concluded that deal probably about 10 minutes before the RNS went out, and it, normally we wouldn't put an RNS out at that time on a Friday. Hopefully, it doesn't look like we're trying to conceal anything. And I mean, as you'll have seen in the presentation Martin's just given, and our results presentation, we go into all the details. So we're certainly not trying to hide anything. We took the view that we had people obviously were expecting the results statement this morning. We didn't want to, sort of dilute that by having a second RNS come out at the same time. So we thought, on balance, it was best just to put that out and update the market, in real time, as say, just after the deal was signed. So, as I say, not trying to hide anything. It's all in the results statement and the presentation.
Perfect. Thank you very much. That actually concludes the pre-submitted questions. So Dan, at this point, if I can maybe just hand over to you just to read out the questions and then give responses, and I'll pick up from you both at the end.
Yes, okay. So the first one we've got is, so do we have a backup plan for deliveries if there's any problems with Royal Mail, such as strikes?
Well, we still have live accounts with DPD. So in the event that there was a strike by Royal Mail, we'd just immediately switch to DPD. So the simple answer is yes.
Okay, yeah. I've got a question here from John. Would you be making any more acquisitions this year? Where do you see the group in 3 to 5 years from now, especially in relation to profit and market cap?
Okay, so dealing with the sort of three elements of that question. At the moment, our main priority is to get NutriCircle bedded down, get into the new warehouse. So I think in the immediate short term, no, we don't see any further acquisitions, but that we never say never in case something was amazing and came across our desks, but not, there's nothing on the horizon at the moment. The next 3 to 5 years, this is a huge market with a huge market potential. So we definitely see massive growth. We are tooling up for growth, both in terms of the three pillars that we touched on: stock, fulfillment, moving to the new warehouse will really allow us to do that, and our continued marketing strategy will allow us to acquire customers and continue to build. So in 3 to 5 years, yes, we see we will be tipped into profitability by then, and we see the market cap reflecting the efforts that we've put in.
Okay, great. We've got a question from Christopher here about the disposals. Could you discuss the valuation process for the Emotion and Ubisan disposals? How do these disposals fit into the broader strategic realignment of the company?
I think when we owned both Emotion and Ubisan was came out as a byproduct of COVID and was a tiny business. Emotion, on the location-based entertainment division, we used a lot of the cash that we had on the balance sheet to get us through COVID. We survived COVID, which I think was our number one priority. We came out, we built the business, we built it back up to about 1.2 million of operating profit. So good, solid profit. We were aware that the capital markets were tightening at that moment in time. We were also very much aware that the location-based business was a very capital-intensive business. We funded the installation of operations, and therefore, in order to grow the business, we would need more cash in the business to continue the growth. We were offered $25 million, so round about sort of 20 times trailing operating profit, and we felt that was the right decision for the business. And I think looking at it now, the capital markets pretty much closed in 2023. So our ability to actually raise cash in 2023 would have been very, very challenging. And I think at best we would have flatlined the business. So we stand by. It was the right decision. We returned cash to shareholders, which was welcomed by the majority of shareholders, and gave us enough cash to realign the business and give it a new life.
Okay, great. And then we've got a question here from Jens. Regarding Discount Dragon, the cost of sales was about 1.5 million. Could you break down the fixed and variable costs? Additionally, could you detail proportions of costs of goods sold, fulfillment, warehouse, payroll, and marketing? And I'm happy to take this one if you want me to, Martin. So yes, we didn't get too much into this in the statement, but the only fixed element really in the cost of sales is the warehouse payroll. That was a little under 200k in the period. There wasn't marketing sort of cost was relatively limited because we sort of hadn't fully got up to speed with marketing. That really came in Q1. So there was a bit of marketing spending there and sort of just under 200,000 on what I would say fixed cost of sales. The rest was sort of variable. And as I think we say in the statement, I think as we grow, as you'd expect, as we scale, we'd expect, other than marketing, these costs to sort of fall as a proportion of revenue.
Thanks, Dan.
Right, no problem. Then we've got a question from Charles. Is the new warehouse for all parts of the business, i.e. NutriCircle and Let's Explore and Vodiac, as well as Discount Dragon?
Okay, so the new warehouse will be definitely for Discount Dragon and definitely for NutriCircle. Let's Explore and Vodiac, the main direct-to-consumer market is in the US, and that's fulfilled by a third-party US logistics company. Any local sort of direct-to-consumer fulfillment we would happily do in the new warehouse. But the majority of sales for that business will now come from tele-shopping channels they fulfill it themselves, so the likes of QVC and similar channels in Australia and Canada. And obviously business to business, where we're actually selling bulk orders into the likes of Hamleys or FAO Schwarz or TK Maxx and the likes.
Okay, great. Rob has asked, it would be great to have forecasts on revenue and profit figures for this year and for next year.
Yeah, no, I mean, and we agree with you. I think the challenge that we have, and I'm not trying to dodge the question, is, but with any forecasts, you've got to give a level of sort of certainty. We're moving into the new warehouse, and as I touched on earlier, we're not 100% certain of how many parcels we can get out in a 24-hour period. We'll go from operating 1.5 shifts to operating 3 shifts to operating, at the moment we do 5 full days and 2 half days. We'll go to 7 days. So we'll go to 7 days, 24 hours a day. We think it's going to be a lot more, but obviously that has an impact as to how quickly we can scale the marketing. So what we'd like to do is get in the new warehouse, get a degree of certainty, and then release some figures. And I think, as investors, there's nothing worse than us publishing a set of numbers that we don't miss because we've been over optimistic. Yeah. And what we want to do is publish a set of numbers that we know we can not only hit, but hopefully we can beat.
Yeah, agreed. Okay, so then we've got Martin asks, to what extent can you afford to automate order fulfillment?
I think there's a certain level of automation that you can bring in. What's important to remember here is we've got about 1,000 to 1,200 SKUs. We are famous for surplus stock, so our SKUs aren't always the same. So it could be Rice Krispies on one day and maybe cornflakes on another day. So automation's great when you're having the same product being delivered on an ongoing basis. When you have variable SKUs, you've got to be slightly careful with automation. Matt Smart have put in automation in their Swedish warehouse. It's cost them £16 million. So we don't want to do at this stage is go and raise 16 million to put in automation when we can actually prove what we can do with a sophisticated warehouse management system. And that's what we've got at the moment. We've got a very sophisticated warehouse management system. We run a barcode and gun system. So we've got guns that check on the barcodes. That makes sure that the picker puts the right item in the basket. It can't put multiple items. It can't pick he or she cannot pick the wrong items. And we've got things like conveyor belts, and we've got sealing machines. So we try and automate as much as possible, but we also try and be realistic as to the return on capital versus just automation for automation's sake.
Okay, that's great. And I think there are a couple of other questions, but we've covered them with some of the other answers. So I think that is as many as we've got. I think we've answered everything here.
Perfect. Martin, Dan, thank you very much for answering those questions from investors. And of course, the company can review all the questions submitted today. We'll publish those responses out on the Investor Meet Company platform. But just before redirecting investors, provide you with their feedback, which I know is particularly important to the company. Martin, could I just ask you for a few closing comments?
Yeah, first of all, thanks for everybody for joining. It really is appreciated at sort of 5:30 on a Monday. I'm sure everybody's got far better things to do, but we genuinely appreciate people sort of tuning in. We're very excited about this business. We're really excited as to the future. We've stress tested this only a tiny bit and been thrilled by the results. The new acquisition's great, bedded in really, really well. So I think we're on for a very exciting journey. We're now starting to put those building blocks in place. The new warehouse will be fundamental in our next stage of the growth trajectory. So hopefully exciting times, and we look forward to presenting again in a few months' time.
Perfect. Martin, Dan, thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Huddle Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.